Well, this surge in bond defaults is certainly a challenge for China's regulators. To discuss this further, I'm joined by Anthony Chan, former chief economist at JP Chase & Co. from New York. Welcome back to the show.
Thank you for having me.
So let's start with those bankruptcies and defaults among Chinese companies. Just how much of an issue is that for the Chinese economy?
Well, I think it really tells you that investors have to be a little bit more careful, but this should not be surprising because if you look at the last 10 years, there's been a surge in the amount of debt that is out there. And of course, when you see that much debt growing so rapidly over a decade, you should expect some sort of increase in defaults. And by the way, it increases efficiency because now capital will be flowing to those areas that actually can justify borrowing, because now there's going to be some increased awareness that when you go into those industries that have excess capacity, there is greater risk. So the bond market will probably take funds out of those areas and bring them to their more efficient use.
So with this increased awareness then, what government policies are there to manage or put in place to prevent future defaults?
Well, I think that to some extent it's being somewhat managed because we still have some instances where the government, if it's a large company, they want to make sure that somehow the bankruptcy is more managed or maybe even a little bit delayed or the process is elongated to some extent. So we are seeing increased efficiency and more defaults, but it's not something that's happening like the floodgates are opening up. It's happening gradually, and I think that's a healthy process.
And let's also look at the new securities law that will take effect in China on March 1st. What's your take on this move as well as its potential impact?
I think that the new securities law is going to take effect on March 1st is a step in the right direction. And I think that China deserves a lot of credit because what it does is it's really going to increase the protection for small and retail investors. So therefore, there'll be more excitement about investing. It will increase the penalties in a huge manner for fraud. So when you invest in these new Chinese IPOs as a small or retail investor, you feel a lot more comfortable and more protected because the government is really watching and really going to go after those firms that have any fraud or incorrect information. Also, the fact is that now they're going to move away from just giving the regulators the right to approve these shares, and it's going to give more sort of autonomy to the exchanges. All this, again, letting the market-related forces sort of regulate how much capital is raised, step in the right direction, and again, moving more in line with what we see in Western markets.
So with this greater market influence, as well as this latest data and these policy moves, what does that tell us about the overall health of the Chinese economy?
I think that the health of the Chinese economy, especially as we move towards approving this phase one trade deal, is going to improve. But we must not forget that last year, fiscal policy added about 0.8% to Chinese economic growth in 2019. And we must not also forget that the People's Bank of China continues to be in a stimulative mode. Recently, of course, they lowered reserve requirement. They're now going to be increasing quite a bit of liquidity as you move into the Chinese New Year. So again, the Chinese central bank and the Chinese fiscal policymakers are out there trying to manage to make sure that the Chinese economy, even if it slows, that it's sort of a soft landing and not a crash. And now with the possible signing of the phase one trade deal, that will be an added boost. So I would say that right now, the Chinese economy is in decent shape. It's not booming, but it's in decent shape.
And as we do look ahead to the signing of the phase one trade deal coming up next week, given the issues in the sectors that are covered in this initial agreement, how do you see those changes impacting the Chinese economy?
Well, I think that a lot of the sectors out there, particularly those involved with exports of products to the United States, will do a lot better. You saw, in fact, this morning, the U.S. trade deficit indicated that Chinese imports were down, obviously because of the tariffs. As we see more and more of the trade deal coming to fruition and some of the tariffs being phased down, you'll see that Chinese exports to the United States will improve, and that will help the export sectors in the Chinese economy. It should boost business sentiment in China, and to some extent, even consumer confidence. So I think it's a big positive for the Chinese economy, but let's not forget it's also a big positive for the U.S. economy. So I think both economies certainly benefit from moving towards reducing these trade tensions.
All right, always good to have you, Anthony Chan there, former chief economist at JP Morgan Chase.